Well, clearly there's frustration about, or in regard to events in South Africa, and the South African gold miners have been falling behind others in the market as a consequence, and so everybody's hurting. We would hope that we're through the worst of it. We'll continue to recover during the course of this quarter and come back strongly in next year. But certainly disappointed with South Africa in general. So we've all got to turn that around.
Absolutely. Adding to that nervousness is, when you see headlines like Anglogold Ashanti cuts its dividend by half, capital expenditure cut of $200 million coming through. That doesn't bode too well for prospects and outlook, though. I mean, how far do we read into that?
I don't think you should read too much. Obviously, we're under pressure. The country's ratings have been cut, and therefore that puts pressure on us in terms of our ratings. So we're taking the appropriate prudent actions to make sure we manage our balance sheet. But at the same time, the fact that we cut expenditures, we're looking at projects, looking at operations, that's not a good thing for South Africa, but at the end of the day, it's the right thing in terms of making sure we as a company continue to have a strong base. We're committed to our major growth projects, so the future still looks very strong. But in the short term, we've got to take the appropriate measures to protect the business, protect the balance sheet, and ultimately to protect people's jobs, given that that investment is required to continue to support those jobs.
What's your outlook for production moving forward? Because this time round, gold production coming in lower than expected at just over 1 million ounces. To what extent are the targets that you have set for the full year period actually achievable at this stage?
Well, clearly we're not going to hit our full year target, given that we're forecasting a drop of 250 as a consequence of the South African situation in the fourth quarter. So that's where that ends, and that's why we've made those capital cuts, and we're moving to make sure we protect our cash position and our balance sheet.
Taking a look at certain developments within the mining sector, it's certainly an interesting time for you to be assuming the role of president of the Chamber of Mines. We've had Minister Susan Shabangu urging the mines not to take unilateral decisions on the retrenchment front, for example. But with challenges like lost production, your escalating costs, increased wages, how much room do you actually have to maneuver? You alluded to it a little earlier, the fact that you've got jobs being a priority and a focal point right now.
Well, it's certainly tough, and we all fully support the Minister and her appeal to make sure that people don't move unilaterally, and they take great care in making those decisions. We would always do that in any case. But 50% of the platinum industry is under severe stress. The gold mining industry is under pressure as well. So we've all got to make sure we keep our operations viable. So somehow we've got to marry those two priorities. But I'm sure we can do things in an appropriate way, involve our employees, involve the government, come up with the right solutions.
It's certainly a tough balancing act to actually play out, and a tightrope that you're walking at this stage. What are some of the solutions that are being put at the table when it comes to Anglogold Ashanti specifically?
Well, I think a very important question. It's a good question. The most important thing is none of us can support continuing wage increases above and beyond inflation if we don't change the underlying productivity, that is production per person, from the operations. We're recommending changes to working conditions so that we can improve by 15% and continue to support paying better wages. We've all got to come together in those conversations, and I think that'll be the key focus for all of us over the next 6 to 8 months.
When you hear comments like the gold mining industry is a sunset industry, what's your response to that kind of rhetoric that's out there, and what kind of opportunity are you seeing, especially where we've announced you've seen a capital expenditure being reined in South Africa? Where's that opportunity moving forward coming through?
Look, those sort of comments from people who just don't know what they're talking about. We see a 30 to 50 year life on the existing operations. What we want to see is more exploration, but with new technologies, with the new approaches. Our operations at Moab and in the West Wits, we see more than 30 years. We hope, in fact, beyond 50 years with those new technologies. Comments like sunset industry are from people who just don't know what they're talking about. And quite frankly, if they were running things, we'd see very short mine lives. We're certainly much more aggressive, forward-looking. We'll make technology changes. We'll improve our mining practices. We do those sorts of things. We've got a long and good future.
Where are you being aggressive when it comes to investments outside of South Africa?
A number of countries, all through Africa, North America, South America, Australia. We've got projects all over the globe, and we want to make sure that South Africa remains an important part of our mix with investment in Mpanang and Moab. So we're still investing heavily in South Africa's future. Our new technology strategy will make a difference, and again we'll demonstrate to people that talk about our sunset industry as being a sunrise industry, as it should be.